Okay, guys, so just for the UK data, just very quickly, let's check in on this. We've obviously had the month end yesterday, last day of November, into the final month of 2015. Typically, typically December is actually one of the, if not the best month of the year for equity returns. This has been a pattern that goes back, well, certainly in recent years. We've coined a phrase now. It's called the Santa Rally. Personally, I don't think we're going to get one this year. But looking at equities, well, this is looking at assets performance in November in local currency terms. And what you've got is that, you've got the DAX leading up here on the left-hand side, turning in 5% upside. That's just on the month. Nikkei, really good month. We had Russia's stock index, good month. So actually quite a good broad-based, geographically broad-based solid equity performance with the Euro stocks as well in here, and then the Shanghai Comp, Italian stock market, FTSE MIB, and so on. Flip to the other side, it's an absolute bloodbath over here. Remember, these are on monthly time frames. And just another killing for the commodity space. And that's because, if you look at the euro dollar in here, which is the worst performing currency out of the lot. So this is all about dollar strength, of course, as well as euro weakness in the case of this currency. But, look at all these currency pairs, all down on the month, which means the dollar strengthened, which means we had just more pain for the commodity space. Also, notably, you got the Greek stock market slipped in here in amongst the commodity bloodbath. You've had the Greek stock market come off quite sharply as well. But yeah, copper leading the pack, and then you've got the two oil markets. You've got precious metals. You've got agricultural commodities. There's no safe haven in the commodity space. It's across the board pain, and that's been the feature of 2015, really. But this is quite an interesting chart, especially when you look on the left-hand side. If you now actually take out, or if you now put it all in dollar terms, okay, this is looking in local currency terms. So in euro terms, the DAX is up 5%. But if we just scroll down here and look at the same chart, but now just in dollar terms, you get a very different picture. And that's because the dollar strengthened, of course, which means the DAX performance is nowhere near 5%. It's actually more like 1%. The Nikkei then becomes the best performing asset. But look, virtually nothing in positive territory once you take into account the fact that the dollar strengthened aggressively. So really it was the feature of the month, a real build-up of momentum in this monetary policy divergence thesis. We're all priced in for the Fed and the ECB to head in opposite directions. It's just how quickly will they be moving apart. And I think the markets have got ahead of themselves. And I think markets are priced for a bigger divergence than we're actually going to get. And that'll be mainly, in my view, as a result of the ECB not quite doing as much as markets have currently got priced. I think the Fed will hike, but I think the ECB won't do the full Monty. I think we'll get a deposit rate cut. I think we'll get an extension of the QE program in terms of the timing of it, i.e. it won't end September 2016, it will end March 2017. They might even go as far as to extend it, not by 6 months, but by 12 months to September 2017. But I just don't think that the Germans will allow an increase in the pace of monthly purchases. I don't think we'll get a move above 60 billion a month to 70. There's some people out there thinking 80 billion a month. I just don't think that's going to happen. So I think that'll be the feature of December. We just take this screenshot off. I think December will be perhaps, or at least the next week or so, might be a reversal of some of the moves we've seen in November. I think we might get European stocks underperforming. They've outperformed. If you go to some daily charts here, I'm going to move all these charts to daily time frames just to get a sense of what's going on in the kind of medium term here. And what we've seen is that this big divergence trade, this big aggressive ECB trade, European equities ramping higher, even though the S&P flat on the month. I mean, we had a big sell-off and then a decent, an equally big rebound, but flat on the month. Whereas the DAX up 5%. This is very unusual to get a divergence of that magnitude. So I think we've gone too far here. I think we get not a Santa rally. I think we get a Santa sell-off, I'm afraid. A double whammy of the ECB not doing as much as markets want, plus then the Fed hike. So this is my view, sticking my neck on the block here. Of course, I might be wrong, in which case we'll have to have a rethink. But at the moment, I would favour European equities underperforming. I'd expect the euro to tick higher against the dollar, at least until the Fed hike rates, and perhaps give us a slightly more hawkish rate hiking trajectory in the language they use. And I think ultimately data in Europe's been pretty solid, and you might see an uptick in the inflation numbers, in which case the Bund looks vulnerable up here. We'll see. Just looking ahead then for the rest of the session, we've
just got the oil output target of 30 million barrels per day, according to Mayor. That's Iran. They urge OPEC to adhere to the oil output target of 30 million barrels per day, according to Mayor. That's been run on Bloomberg.
That's interesting on OPEC.
I know we've got coming run up to Friday's OPEC meeting, where consensus as it stands is for the cartel to keep their output ceiling unchanged.
So Iran here.
Go through the bottom of the hour now.
Turn that off. Iran here are. This is important for Friday, and we'll talk more about it. But Iran are expected to increase their production by at least 1 million barrels a day as sanctions get lifted. And what Iran are saying is OPEC should stick to their 30 million barrels a day quota. What they mean is, let us increase production, and then all the other OPEC members decrease production. That's what Iran want. I've got a feeling others in that OPEC meeting aren't going to be quite so up for that plan of action. That means they just give Iran market share. I'm not sure Saudi Arabia are going to be up for that one. Anyway, that's for Friday. We're going to get UK data here now on the manufacturing.
52.7, that's 52.7, below expected 53.6.
Below expectation,
55.2 from 55.5.
So let's just check in on cable, which, well, more to do with
dollar orders. They come in at 52.3, which is about 2 years 52.1, and marks the highest reading since August 2014.
So, yeah, sorry for talking over this data, but you're getting some downside on cable. We were, earlier on, of course, let's go back like half an hour, and we were making new highs. If I just bring my cable chart in just on the short time frame here, just getting a blip lower off the back of these manufacturing numbers that have seen a 0.9% reduction. Also a touch of a negative revision to last month. I think what's important about this data here from the UK, let me just show you a chart of this, because it's a pretty decent drop from the month before. This is the thing. In terms of how does it compare to expectation, yeah, it's slightly worse than expected. 0.9%. Oh, sorry, 0.9 lower than expectation. But when you look at, let me just bring the chart. When you look at the chart, here's the problem. You've actually seen a sharp drop from last month. Now, last month's number was, you've got to say, now looking at this chart, now having seen the data just announced, last month was a bit of an anomaly. October, just this weird spike up above 55, easily the highest reading of the year. But of course, we've reversed that optimism pretty quickly, and we're back down towards what was a real sort of the doldrums of quarter 2 and quarter 3, down below 52, And so whilst we had a bit of optimism here off the October number, this November number confirmed as back to reality really, which is a PMI number that's it's fine. It's not going to set the world alight. We have got a manufacturing sector that's the expansionary conditions, but it's not like it's on fire. So a slightly depressing feel to this chart, having had some optimism off the October reading. So for cable, some downside here. I mean, if we just look at cable anyway, if you look at the daily chart, cable's been like the euro dollar, and like pretty much everything against the dollar, has been trending lower in recent times. I mean, euro dollar has yesterday hit another 7-month low, and it's the same for cable. I go back, this is the lowest we've been since April. So it's a very common theme here where you've had broad-based dollar strength in November, add on to the fact that we had dovishness from the Bank of England at the start of the month at the last MPC meeting, then this kind of adds up to this downward trending pattern. So let's just finish off the briefing here just with a look at the calendar for the rest of the session. A lot, packed out morning here on the manufacturing side, as is always the case, first day of the month. So we've got through all of that now. We've got the unemployment numbers out of Europe at 10, just in 25 minutes. We're expecting it to stay unchanged at 10.8%. And then into the afternoon, and the main feature of the afternoon will be the manufacturing figures from the US, especially the ISM manufacturing number. Now this one, I think, is going to be potentially really important, because last month we were in a whisker of hitting 50. This is bad news. Dropping to 50. Remember, 50 is that cut-off point. Below 50, and the manufacturing sector is in contraction. There is a real risk here. We might get a sub-50 print on the ISM manufacturing this afternoon. So we shall see. Just adds another kind of interesting dynamic to the Fed meeting. Can they hike into a contracting manufacturing sector? The reason why there's a real risk of this is because the regional manufacturing numbers in November, the Philly Fed, the New York State Empire manufacturing number, these figures have remained weak, remained negative. And so there's a real chance we might get a sub-50 print this afternoon. So that'll be interesting. Outside of the data, on the central bank front, we've already had Carney speak this morning, talking about the bank stress tests. He also mentioned that, don't worry, rates aren't going to go up fast. When rates do start climbing, they're going to go up slowly. Usual kind of central bank chat. We've got Evans talking this afternoon after the European closed though. Okay, that's it for now. Thanks a lot.